Alrighty, if you clicked on this video, your parents are looking into a reverse mortgage. So I just want to preface that a reverse mortgage is also stands for home equity conversion mortgage, or a HECM. So if you hear me say reverse mortgage, just know that I'm talking about the FHA insured reverse mortgage, which stands for HECM, or again, a home equity conversion mortgage. It's been a really long day. I apologize, but I just really wanted to put this video out. Again, my name is Robert. I'm an advisor here. Really help people understand the reverse mortgage, really educate them on the ins and outs of the program, and if this is something that it would be the best fit for them, not only in the short term, but the long term. So if you're like most adult children, you probably are concerned or even have some questions. So let's dive right into it. And if you see me look over here, just know I'm just taking a look at my notes. So what is a reverse mortgage? A reverse mortgage is a loan that allows you access to some of the equity that you have in your home. And I understand there's probably a few misconceptions or even some information out there that you're like, whoa, like, why are you guys considering this? And I just want you to say, it's not the program it once was. There are safeguards and protections that have been put into place. So it's not the same program it once was, and it's really just been enhanced, and there's some benefits and protections that we'll go into throughout this video. So a lot of people think a reverse mortgage, that when they get it, that they're selling the house to the bank. But that's not the case. Your parents are still going to remain on title. They're still going to be the home owners, the owners of the house. And what the reverse mortgage is, just a lien on title, just like any other mortgage. And I think we could go into the reverse mortgage being a scam, but it's not. It's FHA insured, so it's insured by the federal government, and there's all these safeguards that are into place. So we'll just go over the next part. So why are your parents considering a reverse mortgage? So there's a lot of reasons why they may be considering one. And probably one of the biggest things that I see when people look into this is because of their monthly mortgage payment. And I understand that as they're retiring, they're most likely on fixed income, and their biggest expense, their biggest line item is that monthly mortgage payment. And with the home equity conversion mortgage, monthly payments are not required. So there's no principal and interest payments ever on the reverse mortgage. Your parents will still be responsible to pay for their property taxes and their homeowners insurance. So that's probably one of the biggest reasons, is they just want to free up their cash flow so they can spend their money how they choose to. There's other reasons. A lot of the times they want to consider some home improvements. So some of the common home improvements are, the biggest one is the roof. Some other ones are the bathroom, really just to make it safe and accessible for their retirement. Another thing that some of them consider is just new appliances, because they probably got new appliances when they bought the house, and 20, 30 years later, they still have the same old appliances, and definitely could use an upgrade. And the other thing too, there may be rising costs or medical expenses, or maybe their social security income really just isn't keeping up with inflation nowadays. So they're looking into tapping into their home equity to really just breathe and free up their monthly obligations. So if your parents are looking into the reverse mortgage, really one of the first things I do is I advise them to really talk to a trusted professional that could really help customize this program to really fit their goals. So what I do is a discovery call. So this is where I kind of go over their current understanding of the reverse mortgage. I'll ask them kind of what they're looking to accomplish, whether it is to free up their cash flow or to, really set it up in a way where it not only solves their short-term goal, but actually their long-term goals as they are planning to stay and, age in place. So that's one of the first things. After that, there is a mandatory counseling session. So it's HUD counseling. So this is when they go ahead and talk to a non-interested third party, and they basically kind of just go over everything. I go over about what the reverse mortgage is. Some of them go through a budget, and it's really just so they make sure they understand what they're getting into. And if your parents are open to it, you do have the option to attend the counseling with them. So, again, it's really up to your parents if they want you to be part of that counseling session. So, definitely, if you are concerned, I advise that, you kind of ask that you be part of that counseling session. And so again, there's multiple ways that they could access their home equity. They could get it in a lump sum, they could receive monthly payments, or they could leave their funds in a line of credit to use if and when they need it, or a combination of the above. So it's very customizable with how they could actually access their equity with the reverse mortgage. And I continue to mention this because it's probably the most important thing. They still will be responsible to pay for their property taxes and their homeowners insurance. If they have enough equity and if they choose to do so, they could look into setting up what we call a LESA, which stands for LESA, which is a life expectancy set aside. So this is where the lender would then set aside a percentage of their equity to pay for their property taxes and their homeowners insurance on their behalf. So that's definitely something that they could look into. But most of the time, people don't end up choosing that as an option. And if you're still watching this video, I just want to say thank you. But I'm probably assuming that you're kind of thinking, well, what's going to happen to the house when they pass away? What's going to happen to the inheritance? So bear with me, I'm getting there. So you, as your heirs, will have the option to inherit the home. So once the last partner passes away, the last borrower passes away, that is when the reverse mortgage becomes due and payable. So the estate is going to have 6 months to a year to kind of decide what they want to do with the property. So you guys are going to have the option to keep the home or have the option to sell the home. I'll kind of go over both. So if you guys decide to sell the home, which like 95% of the people do, they just contact a real estate agent, they put the house on the market. Once the home is sold, they take the proceeds from the sale to pay back the reverse mortgage, and any remaining equity would be for the estate to keep. If you guys wanted to keep the home, you guys have the option to pay the reverse mortgage off in full, whether it's through cash on hand, through retirement accounts, or through a life insurance policy. Or you can look into getting a traditional mortgage to pay off the reverse mortgage balance. Now you get to keep the home again with monthly payments. Or if one of you are over 62, you can look into living in the house and getting a reverse mortgage of your own to keep the home with no monthly mortgage payment still. And that's basically it. So everyone's situation is different. So if you would like for me to help out, I'd be more than happy to do so. If your parents have any questions, if you have further questions, please leave them down in the comment below, or you could reach out to me directly. Please like, comment, subscribe, and I'll see you on the next video.